Yes, welcome to Veranda CA. A very pleasant afternoon to everyone. Today, as part of chapter number 12, Audit under Fiscal Laws, of paper number 3 of your CA Final Advanced Auditing and Professional Ethics, we are resuming the discussion on the last 20 clauses of your Form 3CD. The first 20 clauses we discussed in the earlier session. This is the next 20 clauses which we need to discuss, right? So going on to clause number 23. Up until clause 22 was discussed in the earlier session. Now we are discussing from clause 23 to clause 44 in this particular session. So clause 1 to 22 are basic clauses. As I said, as we proceed, the clause become much more complicated, right? So questions in the examination will be a case study question, will be applicability of tax audit questions, questions on reporting requirements, questions that can come on what are the procedures that you will perform. So you don't have to memorize anything, you just have to understand what the clause is, what the requirement of each clause is, for which you need to read the study material, and most of you will have an understanding because as part of your articleship you would have gone through this, you would have gone through tax audit, you would have done tax audit, so you will have a better understanding practically as well, but you need to understand that what will be the audit procedures that you need to write them, you need to know how to write them, you know what to write. So that is very important. So even a brief glance or a skim through in this chapter also would suffice the requirements of this chapter, right? So clause number 23. Particulars of payments made to specified section, made to persons specified under section 40A 2B. Now, what is 40A 2B? 40A, section 40A subclause 40A subsection 2 clause B is basically related parties. Now, there are certain parties which are identified to be related parties. I mean, this is section on related parties. So any payments that you have made to them, you will have to report. Now, you don't have to report whether it is excessive, unreasonable, arm's length, not an arm's length. That is for the assessing officer to to identify. You just have to report how much is the amount of payment. Section 40A2 provides that expenditure for which payment has been or is to be made to a certain specified persons listed in the section may be disallowed if in the opinion of the assessing officer the expenditure is excessive or unreasonable having regard to the fair market value and for legitimate needs of business or profession. For the assessing officer to make his decision, you are reporting this. You are reporting under this clause 23. Next is clause 24. Amounts deemed to be profit and gains under section 30A2C, 30A2D, 33AB, 33ABA, 33AC. You need to know what these sections are. Very briefly, you need to know. So 32AC, all these are investment on depreciation only. I mean investment allowance. Then if you're starting a setup in some certain states, you get some allowance. So it's basically on those lines. So clause 25. Any amount of profit chargeable to tax under section 41 and computation thereof. So basically, this is the clause where you have to charge where the income tax on bad debts recovered. All of that will come under this particular section. So you will have to go to section 41. Any amount of profit chargeable to tax under section 41 and computation thereof. Again, not a very significant and important clause from an examination perspective. That's why I have not dealt much into this. Clause 26. In respect of any sum referred to in clause A, B, C, D, E, F, G or H of section 43B. Now, what is 43B? 43B is an important area. 43B is basically certain expenditure that you make are allowed only when you make the payment as per Income Tax Act. So, for example, it's like your GST, your PF, your ESI, any statutory payments, any leave encashment, all of that, and there are certain clauses of things, the interest, all this will be allowed only on payment basis, which is what is A, B, C, D, E, F, G or H, right? You will be allowed to as an expenditure when you compute it. You may have booked it in the books of accounts, absolutely, but you will be allowed only if those expenses are made, a payment has been made. If it is not made, then it will be disallowed under section 43B. It will be allowed in the year in which the payment is made. So that is what is section 43B all about. So you have to report now this 26A talks about few things. One is you have to report on 26A, which is liabilities pre-existed on the first day of the previous year but was not allowed in the assessment year. So since you did not pay in the last year but the liability is existing in the current year, so that is the liability which is existing as at the first day of the previous year but was not allowed in the assessment of any preceding years and was paid during the previous year. So it will be allowed in this year and not paid during the previous year. So that you have to first opening balance out of the how much you paid opening balance this year and what is not paid in the current year was incurred in the previous year and was paid on or before the due date of furnishing return. So due date will be September, October, depending upon, for tax audit cases it is generally October. Okay, was incurred in the previous year and was paid on or before the due date of furnishing the return of income under section 139, not late returns, due date of returns, right? So was incurred in the previous year, and was paid on or before. So that is your clause B. Not paid on or before this thing. Now state whether sales tax, customs duty, excise duty or any other indirect tax levy is passed to the profit and loss. Now GST, for example, you don't pass it to the P&L, correct? What is the entry for GST? If you make a sale, what is the entry that you pass? Entry will be, if you make a purchase account debit, correct, to creditor, to GST input, ITC to creditor account, yes or no? This is an asset account. Similarly, when you make a sales, you debtor account debit to sales to GST liability. This in ITC will be set off against this liability and the net will be paid, correct? Whether there is any P&L, no. So you have to you may mention GST and then you will say it is not passed to the P&L account because even GST is included under 43B of the Income Tax Act. Clear? Next, clause 27A. This is basically your ITC. That time it was SENVAT, prior to GST. Now it is GST. So opening balance of GST. What is the amount that is availed? What is the closed amount? And what is the utilized amount? What is the availed amount? What is the utilized amount that is set off, amount used to set off? And what is the closing balance? This has to be as per the GST portal. So basically, this exercise will involve you to reconcile your ITC balance with your book balance. Right. So amount of SENVAT or GST credits availed or utilized during the previous year and its treatment in the profit and loss account and treatment of outstanding SENVAT credit in the account. So here you have to mention the treatment. So most of the case you will say not passed in the P&L. Not passed, you also will say not passed and you also will say not passed. Next, clause 27B, particulars of income or expenditure prior period credited or debited to the P&L account. Now this will have to be taken into account, very important. If it is any prior year expenditure, again you have to adhere to the concepts of materiality. If it is a material expenditure which is taken for prior period put in the current year, may be disallowed by the assessing officer. That's why we need to mention this. Clause 28, whether during the previous year the assessee has received any property being share or of a company not being a company in which the public are substantially interested. This could be a case study in the examinations, sir, very important. Okay, without consideration or for inadequate consideration as referred to in section 56 subclause 2, section 26 subsection 2 clause 7A. If yes, please furnish the details of the same. Sir, this is required any property being share. So it's only for share, sir, it is not for something else. There's another section called 56 to 10 which is for everything, any property, but this is only for share. So you have got a share, 56 subsection 2 clause 7A, you have got a share, the company has issued a share, basically the company has issued a share. Now the company is a company which public are not substantially interested, not being a company. That means it's a private limited company. Sir, you are a shareholder of that company and the company has issued a share. The amount that you have paid is without any consideration, without any money that you've got the share, or it is for inadequate consideration. Who decides inadequate consideration? Basically, you have to do a fair market value analysis as per rule 11 UA. Basis that consideration will be decided. So if the value of the share is say 500 rupees, and you have received the share for 100 rupees, then this 400 rupees shall be taxable under section 56 to 7A in the hands of the company. The company has to pay tax. Clause 20, so this is 5627E. 5627B, whether during the previous year the assessee received any consideration for issue of shares which exceeds the fair market value of the share as referred to in section 5627B. Assessee any consideration for issue of shares which exceeds the fair market value of the shares as referred to in section 56 subsection 2 clause 7B. If yes, please furnish the details. In this case, again I am repeating, in this case, company has issued a share which is for inadequate, company issued a share and company got some money. Company issued a share, the value of the share is 500 rupees, but company issued it for 100 rupees. So it is inadequate consider. What do you mean by value? Who determines the fair market value? Done by a valuation. I mean, as per the Income Tax Act, if it's a net book value, then a chartered accountant can do. If it's a DCF, a discounted cash flow model that is being adopted, then only a merchant banker can do. That is what the Income Tax Act says. Now, if the company issues a share for 500 rupees, and the fair market value say 800 rupees, then there is inadequate consideration. Company has given a share of 800 rupees, received only 500 rupees. So the 300 rupees excess the company has to pay tax. That is 5627A. 5627B on the other hand is for any assessee which has received the shares, whether during the previous year the assessee received any consideration for issue of shares which exceeds the fair market value as referred to in section 56 subsection 2 clause 7B. If yes, please furnish the details. Meaning what, sir? Company has issued, fair market value of the share is 100 rupees. Fair market value of the share is 100 rupees. Company has issued the shares for 70 rupees. So I received a share of 100 rupees, but I only paid 70 rupees, then that remaining 30 will be taxable in my hands under section 56 subsection 2 clause 70. During the previous year, the assessee received any consideration for issue of shares which exceeds the fair market value of the share as referred to in section 56 subsection 2 clause 7B. If yes, please furnish the details. I hope this is very, very clear. In the earlier case, company has issued the shares, fresh issue of shares, primary issue of shares for inadequate consideration. Here, I am receiving shares on inadequate consideration. The assessee could be anyone, right? Then that will become applicable. And again, the 5627 is only for private limited company, that is companies which public are not substantially interested. Clause 29A. Where any amount is to be included as income chargeable under the head income from other sources under section 56 subsection 2 clause 9. If yes, please furnish the details thereof. A new clause 29 has been inserted, requires disclosure of whether any amounts chargeable to tax under section 56 subsection 2 clause 9, and if so, this is an important area, and if so, please furnish furnish the prescribed details of such income. It provides for taxability as income from other sources. Any sum of money received as advance or otherwise in the course of negotiations for transfer of a capital asset, if such sum is forfeited and negotiations do not result in transfer of such capital asset. So this is what this section 56, this could be a case study in the examination, where there's in the course of negotiation, I have received a token deposit in the course of negotiation for transfer of a capital asset. Capital asset is not transferred, sir, but the amount got forfeited. That means I took the amount and the settlement was over, but it did not result in cap. Say for example, I want to sell a property. The person says, boss, you have to give me at least 5 lakh token advance or 50 lakh token. I got the and it is on a non-refundable. I am not going to refund it back to you if the deal does not happen. And that's what happened. Deal does not happen. That entire 50 lakh is mine. If that is the case, then it has to be taxable under income from other sources to the person who has received it. That is what has to be reported under section 56 subsection 2 clause 9 of the Income Tax Act under clause 29A of form 3CD. The reporting is required. In any such amount to be included as income chargeable under the head income from other sources. Then nature of income and amount thereof are required to be furnished. So that's what is the earlier this thing. No, the table. Prior to such amendment, section 51 provided for deduction of such amendment forfeited from the cost or written down value of the asset. Section 51 has now been amended to provide that any amount taxed under section 56 subsection 2 shall not be deducted from the cost or written down value. So prior to that, what happened? We used to deduct it from the cost of the asset itself, which is there. Now nothing doing, that is completely removed. If we have to pay tax, it will be taxed under other income from other sources, right? 52 subsection 2, any sum of money received as an advance or otherwise in the course of negotiation for transfer of capital asset if the sum is forfeited and the negotiation did not result in transfer of so the money if it's refunded back, then it is not an income. So it should be forfeited and it did not result in transfer. If it results in transfer, then it is a capital asset. It will be charged under capital gains. It won't be charged under other sources. Clause 29B, very important clause, 56(2) subclause 10. 10 includes everything, whether any amount. Now 56(2) 7A and 7B is for shares. This is for everything. Whether any amount is to be included as income chargeable under the head income from other sources as referred to in section 56 subsection 2 clause 10, furnish the following details. Now what is this 56(2)(10)? It was introduced in the Finance Act 2007 and it applies to any assets or assets received on or after 1st April 2017. It effectively applies the assessment year 2018-19. What does this section say? When any person receives in any previous year from any person or persons after 1st April 2017 any sum of money without I received paisa with more than 50,000 rupees, the whole of the aggregated sum, I have not given anything, I just received 50,000 rupees. I have not, it's not a just like that I have got money. Or any immovable property without consideration, the stamp duty value of which exceeds 50,000 rupees, or with consideration, there is inadequate consideration, the stamp duty value and the amount of consideration, the difference between the two, it is 50,000 or more. That is for a consideration, the stamp duty value of such property as exceeds such consideration if the amount of such excess is more than the higher of the following two amounts, namely amount of 50,000 rupees and the amount of equal to 10% of the consideration. So for example, I've got this is from the person who is receiving the property, person selling is capital gains. So person seller will have to pay capital gains for that 50 CA, whatever we discussed earlier, 43 C, all of that will apply. For the buyer, 56 subsection 2 clause 10, income from other sources, right? So he has received a property of guideline value 7 crores, but he is only paid 5 crores. In that case, if the difference between the two is more than 50,000 or 10% of the amount of consideration, if the difference, the delta is more than that, then it will be 56(2)(10) will be applicable and he has to pay tax under income from other sources. That is what is important over here. Any property other than immovable property includes share also, right? Without consideration, the aggregate fair market value is more than 50,000 with same thing, with consideration, which is aggregate fair market value of the property by an amount exceeding 50,000 rupees, the aggregate fair market of such property as exceeds such consideration. Here there is no this 10% and all is not there. This was a later amendment actually, but this amendment was later on. So there could be a case study in this particular area. Okay, so the delta should not be more than 50,000 if it's with consideration. If it's without consideration and if it is more than 50,000, the amount, then in that case the fair market value, or if it's cash, the cash value, then in that particular case you have to pay tax. It will be taxable under 56(2) clause 10. Clause number 30, there could be some case study in the, so clause 29 and clause 30 is on section 56 only, income from other sources, right? Detail, now for 56(2)(10) includes shares, absolutely it includes, because here the definition of property includes share also. But because 56(2)(7A and 7B, what happened, there was an amendment which was made later on saying that was up to 1st April 2017, because after 1st April 2017 this particular section came in which includes everything. So therefore we have to refer to 56(2)(10) even for shares, right? Clause 30, details of any amount borrowed on hundi or on any amount due thereon repaid otherwise than through an account pay check. Clause 30A, whether primary adjustment to transfer price as referred to in subsection 1 of section 92 CE has been made during the previous year, yes or no? If yes, please furnish the following details. Under which clause of subsection 1 of section 92 CE primary adjustment is made? Amount of primary adjustment. Whether excess money available with the associated enterprise is required to be repatriated to India as per the provisions of subsection 2 of section 92 CE, yes or no? If yes, whether the excess money has been repatriated in the prescribed time. If no, the amount of imputed interest income on such excess money which has not been repatriated within the prescribed time. Okay, so this section, clause 30B, I am just going through the clauses, then I will explain. Whether the assessee has incurred expenditure during the previous year by way of interest or of similar nature exceeding 1 crore rupees referred to in subsection 1 of section 94B. If yes, please furnish the following details. amount of expenditure by way of interest or of similar nature incurred, EBITDA, that is earnings before interest, depreciation, income tax act, earnings before interest, tax, depreciation, amortization during the previous year. So, when the lessee incurred expenditure during the previous year by way of interest or of similar nature exceeding 1 crore rupees, then we have to 1 crore rupees referred to in subsection 1 of section 94P, then we have to explain this. Amount of expenditure by way of interest or of similar nature as per 1 above, which exceeds 30% of the EBITDA as per 2 above. Details of interest expenditure brought forward as per subsection 4 of section 94B. Details of interest expenditure carried forward as per subsection 4 of section 94B. Clause 30C. Where the SEC has entered into impermissible avoidance agreement as referred to in section 96 during the previous year, if yes, please specify nature of impermissible avoidance agreement, amount of tax benefit in the previous year arising in the aggregate to all the parties of the arrangement. Reporting under clause 30C has been kept in abeyance, so we don't have to worry about it. It's more applicable from December 21, it's kept in abeyance because it's a very difficult clause to report on. There are a lot of issues in this clause, therefore it has been kept in abeyance. Now, let's go back. So, 30A, 30B and 30C. 30C let's not discuss because this is kept in abeyance. So, first let's discuss 30A. First let's discuss 30A. Sir, what is 30A? 30A is basically reporting under section 92 CE of the income tax law. Right? It says, basically you have to, if you have studied, see again, you will understand this only if you have gone through Income Tax Act, if you have attempted to go through your income tax paper. So, for those of you who have done transfer pricing, this will be easy for you. So, if there's an adjustment that you need to make. I am not an income tax faculty, but there is an adjustment that you need to make which is referred to in subsection 1 of section 92 CE. Whether it has been made during the year. If yes, so basically your transfer pricing at the rate at which you transfer to your related parties, that is your transfer pricing. If you make an adjustment, primary adjustment to that, if the SEC has made that, then it has to be reported. For those there is no associated enterprise, nothing like that, then it is not required to be done. If at all there is a transfer pricing adjustment made, then this is a new clause, this is not there earlier. If at all it is been made, then in that case, we will have to give details of that adjustment that is being made. Under which subclause adjustment is being, subsection 1 has multiple cases where you have to make this adjustment. Okay. Before that, clause 30 is any amount which is paid, borrowed on hundi or any amount due thereon, repaid otherwise than on account. So, I borrowed through a hundi, a promissory note, and I have paid by cash, then that has to be reported under clause 30. I think that's very clear. So, 30A is on 92 CE, that is your transfer pricing where any primary adjustment has been made. Okay. Then whether the excess money available with the associated the definition which is given under section 92, basically a related party, okay, 26% or more, it's called an associated enterprise, all of that. You have to refer to your section 92C is required to be repatriated to India as per the provisions of subsection 2 of section 92. So if it's if excess money is available with the associated enterprise, required to be repatriated to he wants it to be repatriated to India as per, so there are some thresholds which are given under section 92C. If it is exceeding that, then it has to be repatriated. If it is repatriated, if the excess money has been if yes, whether excess money has been repatriated within time. If no, then interest has to be imputed, and with interest it has to be repatriated. Amount of interest income on such excess money which has not been repatriated within the prescribed time. You have to mention the amount. So if you refer section 92C, this clause will become easier to understand. Clause B, 30B is on the other hand is on 94B. So that is more on the interest expenditure. So 92C is on interest income, 94B is on interest expenditure. If you have incurred in expenditure by way of interest or of similar nature exceeding 1 crore rupees in referred to 94B, foreign currency loans, in that particular case you will have to report that. If yes, please furnish the amount of expenditure, EBITDA, that is 30%. What is the EBITDA of the company during the previous year? If it is more than 30%, amount of expenditure by way of interest or of similar nature as per 1 is above, exceeds 30% of the EBITDA as per 2 above. Yes, if that is the case, details of interest expenditure brought forward as per subsection 4 of section 94B. So you can brought it, to that extent it will be disallowed, it will be brought it forward. That's what it means. Details of interest expenditure brought forward as per subsection 4 of section 94B. Amount assessment here, I mean, you have to, there's a table there, assessment here, amount rupees, I mean, this is the table that needs to be given. Details of interest expenditure carried forward as per subsection 4 of section 94B. Right. So, first one you have to mention the nature of expenditure, second one your EBITDA, then you have to say whether your EBITDA, your expenditure is 30% more than the EBITDA, because that, to that extent it will be disallowed. Opening brought forward details of interest expenditure, closing carried forward details of interest expenditure, that has to be mentioned under this particular clause 30B. Again, you have to refer 92 CE for 30A and 94B for 30B. 30C is not applicable because it is kept in abeyance. That is more on section 96 of the of the Income Tax Act. Next clause is clause 31A. Again, this is on 269 SS, where the loan is, where you repay loan other than account pay demand draft, or you get loan other than account pay demand draft, account pay check, which is more than 20,000 rupees, then you have to report the details. Been there from the very beginning of time. Particular of each loan or deposit any amount exceeding the limit specified in section 269 SS, which is 20,000, taken or accepted during the previous year. Name and address of the year. 31A is taken, you have received money. You have received money. Name and address of the PAN of the lender, amount of the loan taken or accepted, whether the loan deposit was squared up during the previous year, whether the loan squared up, whether you have paid it back. So, whether you have taken any loan as per section 269 SS, which is other than account paid demand draft, account paid check. Maximum amount outstanding at any point in time during the if there are 5 loans, then you have to mention the details of each of the 5 loans. Whether the loan or deposit taken or accepted by check or bank draft or using of electronic through a bank account. So, how it was received. In case the loan or deposit taken or accepted by check or bank draft, whether the same was taken or accepted by account pay check or an account pay demand draft. These particulars need not be given in case of a government company, a banking company, or corporation established by a central or state or provincial act. So, if the SEC is a government company, bank company, these particulars need not be given because they keep getting loans. Clause 31B is the same clause, but the thing is where you have received accepted loans. Okay, 31B, particulars of each specified sum in any amount exceeding the limit specified in section 20,000 taken or accepted during the previous year. So, the earlier one was on, there's a mistake here, I think 31B is on taken, 31B is on name of the person for whom specified sum is received, from whom specified sum is received. Okay, amount of specified sum taken or accepted, whether specified sum was taken or accepted by check or bank draft or use of electronic clearing system through a bank draft. In case of a specified sum was taken or accepted by check or bank draft, whether the sum was taken or accepted, same thing. I mean, whether the sum was taken by an account pay check or an account pay demand draft. Particular that A and B need not be given in case of a government company, bank company, or a corporation established by the central or the state government. So here, just a quick change. Clause 31A and clause 31B. Right. So, 31A talks about cases where I have received money. 31B is where I have given money. Name and address for whom specified sum is received. So, 31A is where I have received money and 31B is where I have given money more than what is specified. Or the deposit, yes, that's what it means. Yeah. Again, these clauses are not very regularly tested because these are very old clauses. They have been repeated. So, you need to know what is there, but highly unlikely that these clauses will be asked in the examination. Next one. Particulars of each receipt in an amount exceeding the limit specified in section 269 ST in aggregate from a person in a day in respect of a single transaction or in respect of transactions relating to one event or occasion from a person during the previous year, where such receipt is otherwise done by a check or bank or use of electronic clearing system through a bank account. Okay, so name, address and PAN card. So this, section 30, it's a mistake from my end, 31BA is on the 31BA is on receipts. 31BA is on receipts, right? So name and address of the, so here again 2029 269 ST also to SS and ST. SS is where it is given, where SS is where you are paying the, where you are receiving the money. Here you are giving the loan, right? Particular of each received in amount exceeding the limit specified in section 269 ST, aggregate from a person in a day or in respect of a single transaction or in respect of a transaction relating to one event or occasion from a person during the previous year, where such receipt is otherwise than by a check or a bank draft or use of an electronic clearing system through a bank account. Nature of transaction, name and PAN, amount of receipt, date of receipt. Multiple things will be there. Particulars of each receipt in an amount exceeding the limit specified in section 269 ST in aggregate from a, same thing, in aggregate from a person in a day or in respect of single transaction or in respect of transactions relating to one event or occasion from a person received by a check or a bank draft, not being an account paid check or an account paid. So the difference between 269A and B is otherwise than by a check or a bank draft, right? Here the difference is it received by a check, but it is not an account paid check or an account paid bank draft. So you have received money, but it is not, it is either not by a check or an account paid draft, it is by cash. Then you have to mention here BB. Okay. Here you have received check only, sir, but it is not an account paid check or an account paid demand draft or a bank draft. In that case, you have to refer in clause BB. So I think that's the differentiation in the earlier clause as well. Okay. Yeah, that's the difference here. Same was taken or accepted by an account paid check or an account paid bank draft, right? Or bank draft in case. So even in the earlier case, clause 31A, particular of each loan or deposit in amount exceeding the limit specified in section 269 SS taken or accepted during the previous year, you give all of this maximum outstanding during the previous year, whether the loan or deposit was taken or accepted by a check or demand draft or use of electronic system through a bank account. In case the loan or deposit was taken or accepted by a draft, whether the same was taken or accepted by account paid check or account paid demand draft. Yeah. So this is already taken, so I am skimming through. So 31A and 31B is on 269 SS. 31BA and 31BB is on 269 ST. Yes, okay. Hope we are clear with this. I mean, these are very old, this thing, again, I don't think there will be any questions on this. BC. Particulars of each payment made in an amount exceeding the limit specified in section 269 ST in aggregate to a person in a day or in respect of a single transaction or in respect of a transaction relating to one event or occasion to a person otherwise than by a check or a bank draft or use of electronic system through a bank account during the previous year, name and address of the payee, name of, so again BA and BC is receipt, BA and BB is receipt, BC is on payment, clear? So B 269 SS is on loan, deposits or loan, this is any receipt or payment, right? Nature of transaction, amount of payment, date of payment. BD again same thing, so BA, BC, so BA, BB, BC, BD, okay. BA is receipts, BC and BD is payments, clear? When I say again under receipt there are two things. BA talks about whether it is made, whether you have paid through bank or draft, yes sir. The BB is whether yes you have made through bank or whether it's account paid check, account paid demand draft, that's what, same thing for payments also. So if you see this, same context, but whether made by a check or bank draft, not being an account pay check or an account pay, it is made by a check but it is not account pay check or account pay demand draft, that has to be mentioned over here. So I mean it is easier said than done, it is actually difficult. The company has to maintain records of what are the payments that are made by check and account pay bank draft. Particulars that BA, BB, BC and BD need not be given in case of a receipt or payment to a government company, a banking company, a post office savings bank, a cooperative bank, or in case of any transactions referred to in section 269 SS, or in case of any persons referred to in notification so and so 3rd July 2017. Now 269 SS, if you are reporting, then you don't have to report under 269 ST. Right, because 269 SS is on loans. This is not on, this is any receipt or payment. 269 ST is any receipt or payment. SS is only loans accepted or loans taken during the year. Clause 31C, particulars of each repayment of loan, that is 269T, or deposit or any specified advances in any amount exceeding the limit specified in section 269T made during the. So 31A and 31B is on loans taken during the year. 31C, BB, BC, BD, BA, BB, BC, BD is on on loans, any receipts or payments. 31C is on the repayment of the loans. If you are repaying the loan back, okay, the limit in an amount exceeding the limit specified in section 269 ST made during the year, name and address and permanent account number, that is the PAN of the payee, amount of the repayment, maximum amount outstanding, whether the repayment was made by check or bank draft or use of electronic system through a bank. If yes, in case repayment made by check or bank draft, whether the same was made through an account pay check or an account pay demand draft. 31D, same thing what we discussed in 269 SS for taken, same thing is for giving. Particulars of repayment of loan or deposit or any specified advance in amounts exceeding the limit specified in section 269T received otherwise than by a check or a bank draft or use of an electronic clearing system through a bank account during the day. Same thing was discussed in that also. Name and address. So 31D is all the payments, sorry, 31C is all the payments, 31D is where you have made the payments, but it is other than by check or demand draft or use of electronic clearing system. So that has to be specifically reported under 31D. Same thing, amount of loan advances. 31E, particulars of repayment or loan or deposit or any specified advances, any amount exceeding the limit specified in section 269T received by a check or a bank draft which is not in an account pay check or an account pay bank draft during the previous year. Name and address of the lender or depositor or person for whom specified advance is received. Amount of loan, or so 31E is on particulars of repayment of loan or deposit or any specified advance in which is exceeding, so again this is also repayment, okay, by a check or a bank draft which is not in an account pay check and account. So 31D is where you are not using it at all, otherwise than by a check or bank draft. So 31C, 31D and 31E, I am just summarizing it here for your better reference. 31C is all, okay. 31C is all, because see 31C, if you look at, there are two subclauses here. Clause 4 which says was made by a check or bank draft or use of electronic clearing system through a bank account. Was made by a check or yes, I have used some part of it. Next one is having used that I have was made by check or bank draft or use electronic system through a bank account. Yes. Having, how much of it is through an account pay check or account pay demand draft, that is clause 5. Now 31D is where I have not used banking channels. 31E is I have used a banking channel, a check or demand draft, but it is not an account pay check or demand draft, that is 31E. Same applies for earlier clauses also. Again, PAN number, etc. you will have to give. So you just need to know the differentiation. Very unlikely that this will be asked, but you need to know the differentiation between all the clauses. Probably what you could do is just summarize it in a neat table so that before the end of the exam, last day before the exam, quickly revise it and you will be able to understand this very quickly. So also refer 269 SS and 269T. Same thing, it is not applicable for government company. I mean, whatever you have given, you will have to give your name, PAN number and the amount of loan or the specified advance which is not account pay check, account pay demand draft. Clause 32A. Now 32A is details of brought forward losses or depreciation allowance in the following manner you have to disclose. Any unabsorbed depreciation, unabsorbed investment allowance or whatever, that has to be brought, that has to be shown it here. Okay. Assessment here, nature of allowance, brought forward loss also you have to show, and brought forward depreciation also, unabsorbed depreciation also has to be shown in this clause. Very, very important clause. Okay, year on year you'll have to show, assessment year wise you'll have to show. Again, there is the limit, right? So there is section 72 which talks about you cannot carry forward every loss. Maximum business loss is 8 years. Certain laws there is no carry forward. So all of that has, basis this schedule only the assessing officer will decide. From the previous sentence and the assessment orders. Above brought forward losses not allowed under section 115 BAA, BAC and BAD are to be listed out assessment year wise and section wise as per the return, and where addressed as per the addressment order are to be reported under this clause. So even though the SEC is so here all losses are not allowed under section 115 BA, BAC and BAD. So because you're not allowed, you have to lapse everything. Okay, if a amount is adjusted by withdrawal of additional depreciation on account of opting for taxation under 115 BAC and BAD, so all of that has to be disclosed. I know you have to read these sections and you have to accordingly fill up the annexure. Are to be reporting format is prescribed for the sake of standardization. Note, amount is adjusted by withdrawal of additional depreciation on account of opting for taxation under section 115 BAD is required to be filled only for assessment year 21-22, because post which you will not be allowed to carry forward. Clause 32B. Whether any change in the shareholding of the company has taken place in the year due to which the loss incurred during the prior to the previous year cannot be allowed to be carried forward in terms of section 79. So this is a very important section, very old section. So if it's a privately held company, if there are 4 shareholders, and one of the if one shareholder does not, then that's the provision of this section. If the private limited company, there's a change in the shareholding, whereby one of the shareholder liquidates the share, in that case the relevant portion of the loss, carried forward loss, which to the extent of he could not carry forward his shareholding, that will not be allowed. That will not be allowed. So that we have to report it under section 2, clause 32B. Clause 32C. Whether C has incurred any speculation loss referred to in section 73 during the previous year. If yes, please furnish the details. Whether C has incurred any loss referred to in section 73 in respect of specified business. There is a list of specified business for which 100% allowance has been given. Okay, if yes, please, because that specified business can only be, the loss against specified business can only be carried forward and can be set off against profits of the other specified businesses. You cannot do it under normal business income and business losses. Clause 32E. In case of a company, please state whether the company is deemed to be carrying on a speculation business as referred to in explanation to section 73. If yes, please furnish the details of speculation loss, if any, incurred during the previous year. Clause 33. Section-wise details of deduction, if any, admissible under Chapter 6A or Chapter 3, Section 10 and 10E, that is SEC deductions, that has to be mentioned. Chapter 6A could be ATJJAA, if it's individual then ATC, your ATD, all of that has to be mentioned here. This is the format. Clause 34, this clause on the TDS, this is easier said than done. The very, very dreadful draconian clause which was introduced very lately. Okay, where the SE is required to deduct or collect as per the provisions of chapter 13B, sorry not 13B, 17B or chapter 17BB. If yes, please furnish the details. So deduct or collect tax, so TDS or TCS. This is the format, sir. TAN, section, that is what is the section under which you are deducting or collecting tax, nature of payment, total amount of receipt or payment or receipt. So total payment, that is your expense amount. Total amount on which tax was required to be deducted or collected. So 10 lakh, in that I have to deduct say 30% assume. So 3 lakhs I have to, total amount of tax was required to be deducted or collected out of 4. So on by 10 lakhs, I am required to deduct tax only on say 7 lakhs. Possible because others could be less than the exemption or not applicable or whatever it is. Total amount on which tax was deducted or collected out of 5. So 3 is your complete amount of that it should match with your financial statements. 4 is on how much I was supposed to deduct tax or collect tax. 5 is how much I have actually collected. 4 and 5 could be equal, 4 and 5 may not be equal, right? Amount of tax, now the 3, 4 and 5 is on the expenses. Now, amount of tax deducted or collected out of 6, right? Total amount on which tax was deducted or collected at specified rate out of 5. So sorry, total amount on which tax was deducted or collected. So 5 is on the tax. So 3 is your total expenses. 4 is total amount on which tax was required to be collected or deducted. That is 4. 5 is total TDS, total amount on which tax was deducted or collected at specified rate out of 5. Okay, total amount on which tax was deducted or collected at a specified rate out of 5. Okay, 3 is total, 4 is supposed to be, 5 is actual. So this is all expenses. Now 7 let me see here. 7 is basically amount of tax deducted or collected out of 6. Amount of tax deducted or collected. What is the actual amount of tax deducted or collected? Total amount on which tax was deducted or collected at less than specified rate. So 10% supposed to be 5%. I've rated only at 5%. So that is the delta has to come here in column number 8. Column number 9, amount of tax deducted or collected on 8. Column number 10, amount of tax deducted or collected not deposited to the credit of the central government out of 6 and 8. So 7 and 9 and 8, sorry, out of 6 and 8, so amount of tax deducted or collected out of 6. Okay, so in between this, that could be a difference in the sense there could be 2 scenarios here. One scenario is where I am required to deduct TDS, I am not deducted. Okay, total amount on which tax was deducted or collected at a specified rate out of 5. That is your 6. Out of 5, that is your 6. Amount of tax deducted or collected out of 6. Okay, how much tax I have deducted or collected? Total amount on which tax was deducted or collected at less than specified rate. That is your 8. Right, amount of tax deducted or collected on 8. So there could be 2 scenarios. The first scenario is where I have not deducted, which will come here. Second scenario where deducted less than the specified, not more. Both the scenarios, the approximate amount of expenses will be disallowed for the purpose of computing. That is your section 40A1, which we discussed earlier. 40A1 and 40A1A. That will come in. This has to be given section wise. A very draconian clause, very dreadful clause from a practical perspective. It's very difficult to do it. But yes, this is now people are following. When it came in 2017 or 18, this was very difficult to interpret. But now I think systems are there. Assessors also understood that this has to be reported. Clause 34V, where assessor is required to furnish the statement of tax. So this is your TDS returns. If yes, please furnish. TAN type of form, that is form 16, and that is a certificate, sorry, 26, 27Q, 27, you have different types of forms depending on 26 and 27 and 27Q, depending upon the type of nature of payment, nature of transaction. Due date of furnishing, date of furnishing, whether statement of tax collected contains information about all transactions which are required to be reported. If not, please furnish. So there could be some transactions that are missed out, that has to be reported here. 34C, where assessor is liable to pay interest for non-filing or late filing, he has to pay interest on TDS. This is TDS and this is TCS. If yes, please furnish. In case of a trade, now clause 35, this is on the stock. In case of a trading concern, give quantitative details of principal items, only 10%, more than 10% of your total purchases, that those are principal items. Opening stock, only quantitative details, sales and closing stock. If it's a shortage or excess, if any. So you have to give quantitative for principal items. If it's clause 35B, in case of a manufacturing concern, give quantitative details of principal items of raw materials, finished products and byproducts. You have to give the same thing. Here only thing, opening stock, purchases, consumption, sales, closing stock, yield of finished products, how much you are able to make, percentage of the yield and shortage or excess, if any. These are the 3 additional things. Clause 36 omitted by the income tax rules effect from 1st April 2021. Very good. Please be happy on this. Clause 36A, but new clause have been inserted because of dividend. Your dividend DDT has been removed. It is now shareholders has to pay tax, not the company. Therefore, it has been removed. But now, where the SEC has received any amount in nature of dividend, as your deemed dividend provisions are still there. Section 2, clause 22, subclause E is still there. Therefore, deemed dividend, if applicable, that has to be reported. Furnish the details. Since DDT is not applicable with effect from assessment year 21-22, hence reporting under this clause would not be relevant. That's why it is omitted. Clause 37. where all these are on the audits, where any cost audit was carried out. If yes, give details, if any, of disqualification or disagreement or any material value quantity as may be reported identified by the cost auditor. This may not be applicable for everyone. It is only applicable if you are manufacturing concern, cost audit under the Companies Act. Clause 38, where any audit was conducted under Central Excise Act of 1944. If yes, please give the details of any disqualification or disagreement on any matter. So what basically you need to do as a tax auditor, you need to check with the management whether there is any audit conducted. If yes, please ask for those reports and see whether there is any disqualification, disagreement on anything, and that has to be suitably reported. Clause 39 is on section 72A of the Finance Act, which is your service tax audit in relation to valuation of taxable services. If yes, give details of any disqualification. This is all on the audits, 37, 38 and 39. 40 is on the ratios, details of any turnover, gross profit, previous year and preceding year. So what is the previous year gross profit? What is the preceding previous year gross profit? Gross profit by the percentage, you have to give the percentage, gross profit ratio, net profit ratio, stock in trade by turnover, that number of time, inventory turnover ratio, and the material consumed or finished goods produced. The details required to be furnished for principal items of goods traded or manufactured or services rendered. Okay, so materials consumed or finished goods produced, that is another ratio that we need to give. So total turnover, gross profit ratio, net profit ratio, stock in trade or by turnover, and materials consumed by, that is your yield basically, material consumed by finished good product. Now details to be furnished for principal items of goods traded or manufactured or services rendered, not for everything. Now this is for this 4 and 5, not for, this is already made available from the financial statements. This will be only for 4 and 5, the last clause. Clause 41. Please furnish the details of demands raised or refunds issued during the previous year under any tax law other than Income Tax Act and Wealth Tax. That is your GST refund or whatever, any demand is raised or refund is issued during the previous year, you have to mention over here. Clause 42, for which you need to get the GST login, see whether what is the form that is refund form that has been filed or any demand that is raised. We will have to see, we have to check from the management, and you have to get a written representative. Always under tax audit clauses, if any reporting has been asked, okay, please ensure that you give any procedure that have been asked. Please ensure that you kind of give your written representation as a point. The final point should always end with a written representation. Any clause, please end with there's a standard point that you need to have across all clauses. Get written representation from the management as per SA 580. You will have to mention that. Clause 42. This is a new clause where the assessee is required to furnish statement in form 61 or 61A or 61B. Sir, what is this? Basically SFT forms, specified financial transaction. So there are certain financial transactions that are specified for which you need to file these special. The company needs to file these special form. It's given what which assessee has to file. Basically, if the company is issuing shares, or if the company has got a foreign exchange ECB loan. So there are certain transactions which are there. If those transactions is applicable, the company has to file by 31st May or something. The company has to file these SFT forms. So if yes, please furnish income tax department reporting entity number, type of form, due date, date of furnishing, whether the form contains about all transactions. If not, please furnish the details. Clause 43, the penultimate clause, whether the assessee or its parent entity or alternate reporting entity is liable to furnish the report as referred to in subsection 2 of section 286. Again, this is a very new clause. If yes, please furnish the details. Now, this is a clause for multinational companies which are present all across the globe, and they have to file a specified form. If yes, whether they have filed this form, whether they are covered under section 286 of the Income Tax Act, where the assessee or its parent entity or its alternate reporting entity is liable to furnish the report as referred to in section 2, subsection 2 of section 286. If yes, whether the reporting has been furnished by the assessee or its parent entity or its alternate reporting entity, name of the parent entity, name of the alternate reporting entity, date of furnishing the report. Now, what is this section all about? Finance Act 2016, this is from 2016, introduced section 286 in the Act, has introduced the provisions relating to CBCR reporting, country by country report. What is it called, sir? CBCR, country by country reporting, and master file pursuant to adoption of OECD's Base Erosion and Profit Shifting BEPS Action Plan 13 in India. So, section 286 is not applicable for all companies, it is applicable where the company has presence worldwide. Right? Under section 286, an international group, this could be an important question, that's why I have given the explanation here, this could be an important question in the examination. An international group has to furnish CBCR, country by country reporting. International group means the group which has presence all across India, at least more than one country. Right, has to furnish CBCR containing information about the whole group comprising of various constituent entities. Say a company, a multinational company has presence in India, China, Russia, USA, whatever. So, country by country we have to report. Such a report is to be filed in India if the parent entity is resident of India, parent means the ultimate parent entity, or the international group has appointed a constituent entity which is a resident India to file the CBCR on behalf of the old group. So, this will be applicable, this reporting under section 286 will be applicable if the parent company is based out of India and is a resident of, I mean when I say based out of India, resident of India, which is based on incorporated under the Indian laws, is the resident of India, or there is a situation parent company is not in India. However, the international group has designated an entity in India to file this form. That is the alternate reporting entity. That is what it means by an alternate reporting entity. This one. In that case, this we have to report under this clause whether the report is filed or it is not filed. The report under section 286 subsection 2 is filed by the parent entity which is a resident in India or the alternate reporting entity which is a resident in India. So, both of course they have to be resident in India, they have to be associated in India. The tax auditor should verify if the taxpayer is required to file the form 3CEAC based on the satisfaction of the conditions prescribed. The tax auditor should also verify if the taxpayer whose parent is a non-resident has filed form number 3CEAC. This is little important. Again, I repeat this. If the parent entity is India, or if the reporting alternate entity is Indian and is in India, then we have to file and report under this clause. That is what is given. The tax auditor should verify if the taxpayer is required to file form 3CEAC. This is your CBCR report based on the satisfaction of the conditions prescribed. The taxpayer should also verify if the taxpayer whose parent is a non-resident has filed form number 3CEAC, that is your alternate reporting entity. In case of alternate reporting entity, verify if the taxpayer whose parent is a non-resident has also filed form 3CEAC, that is the country by country report. The taxpayer may obtain necessary certificate from the taxpayer in respect of constitution of the international group. So, the group structure has to be obtained to identify which is the alternate reporting entity. If Indian entity, then we have to report under this clause. Clause number 44, the final clause, but again this clause they have kept in abeyance till 31st March 22. So, this will be applicable only from the next year because this was a dreadful clause. Already GST audit was made applicable, Income Tax Act also you brought this GST piece. It was a nightmare for the assessees and for the auditors because such kind of infrastructure did not exist. Therefore, this clause was kept in abeyance. It was kept optional. If you want to report, you report. And then earlier it was made optional. Then it was said, boss, we'll keep it in abeyance. And then GST audit itself was abolished. So, breakup of total expenditure of the entity registered or not registered under the GST. So, this is the table in which you need to report total amount of expenditure incurred during the year. This should match with the financial statements. Expenditure in respect of entities registered under GST. So, I have a business so GST registration is state by state, you guys will know. So, Tamil Nadu, Kerala, Andhra Pradesh, Karnataka. I have expenditure, I have GST registration only in 3 states. Kerala, I don't have a GST registration because I am not required to. In that case, you have to bifurcate your entire expenses into GST and non-GST, and then you will have to give it in this format. And then they will check this with what you have filed it with the GST portal in each of the states as per the GST audit. So, basis that this form was prepared, which is very difficult to do it, and therefore it was kept in abeyance. Expenditure in respect of entities registered under GST relating to goods or services exempt from GST, relating to entities falling under composition schemes, relating to other registered entities, and total payment to registered entities. Expenditure in respect of entities not registered under GST. So, you have to bifurcate this total expenditure into this and this. This is part 1 and part 2. Part 1 again is bifurcated into these 4 parts, 1, 2, 3 and 4. Goods or services exempt from GST. There is no GST. The expenses, it's there like that. Relating to entities falling under the composition schemes. Expenses where, I purchased from composition dealers, I purchased from dealers, companies which exempt from GST. Other registered entities, and total payment to registered entities. So this is very, very difficult to kind of do it at this point in time, and therefore it was kept in abeyance. Reporting under clause 44 has been kept in abeyance till March 31st March 22 as per the given circular. So till then we can relax, post that we'll have, but from an examination perspective this may not be relevant because this will not be asked. It may be asked only from the next attempt onward, that is December 22. This will become more important because the reporting will start post that, right? Signature and stamp seal of the signatory. Now, this is the last part of it. Form 3CD has to be signed by the person competent to sign form number 3CA or form number 3CB. That is the chartered accountant, as the case may be. He is also to give his full name, address, membership number, firm registration number, wherever applicable, place and date. Further, the e-filing portal requires the tax auditor to affix his DSC, digital signature, while registering himself. He is also required to put his stamp and seal as well. Very important this is. While now generally when you file your e-filing portal, practically there is no requirement of giving a UDIN. But however, when you give a 3CD and 3CA, you need to generate a UDIN. This could be a mandatory, this could be a question in the examination on UDIN. While issuing the tax audit report under section 44AB, that is 3CA 3CB, the auditor should generate the appropriate UDIN and refer the same in its report. So in 3CA, in the portal you may not, there is no place for UDIN, but you have to still generate the UDIN and keep it for your records. So with this we cover all the clauses of, right from clause 1 to clause 44. I have taken you through all the clauses. Now it is important for you guys to study these clauses, at least glance through the clauses. Wherever you have doubts, you can reach out. The most basic requirement is to know these sections upfront, because you would have studied these sections in your Income Tax Act. If you don't know, it is important to read these sections first and then go through. You don't have to memorize the the clauses verbatim, that is not required. You don't have to memorize the clause numbers also. What will generally be asked is the tax audit applicability, or they can ask you certain reporting requirements. They can give you a case study, they ask you to report under the tax audit, respective tax audit clause, or they can give you a reporting and ask you what are the procedures that you will perform for some particular clause. These are the 3 possible scenario questions that can be asked in the examination from this chapter perspective. So I wish and I hope that you read this clause, and I hope this entire class is of some benefit to you. Please go through the study material to consolidate your understanding. Till then, take care and thank you.